I'm up big today, but I'm still down more than $1 million. What about you guys?
Gosh, I would do anything to only be down $1 million, Dave. I was almost down 10.
Well, welcome back, my passive income investors. Like to the major stock news rattling the markets today. We are going to be dabbling down into stocks I think you should be buying now, from dividends to growth plays. We're going to be dabbling down into major stock news surrounding the companies that I am down over 50% on. We're going to be dabbling down into my six-figure brokerage accounts as well, talking about incorporating how I'm going to be changing up my strategies and how I'm going to be investing moving forward. And if you enjoy the clarity of my transparency and all the wonderful homework I do, I'd appreciate it if you hit that like button, folks. But we're going to zoom out and kick this off by first of all talking about this pandemic. And I am so thankful that, all of the volatility and not knowing how this is going to pan out, we finally got the light at the end of the tunnel. The variants, they don't stand a chance here, guys, and we have seen a full recovery in those recovery stocks. So I don't recommend chasing any of the recovery plays right now, but when we get into some stocks to buy, you'll see some opportunities, I promise. But yes, guys, I don't think we're going to get a second black swan event. That was like my fear of a black swan on a black swan, where, all these variants of this virus start coming out and we need to make new vaccines, but we don't. Of the dozen, I think the half dozen variants that came out, the vaccines are proving to be able to fight them pretty resiliently. So, goodness gracious there. Gods are helping us out. Stock market should be doing okay. We got more stimulus coming out here as well very shortly, guys. And we're seeing a bit of a rebound across the broader market. So this is good. But where should you be putting your money? Well, let's just take a look at a few quick stocks that I admire. I'm not a financial advisor. I'm some kid that lives in his parents' basement. But my God, I own a lot of Northland Power. When you're looking at Enphase and any of these natural or renewable plays out there, I don't know why they're crashing so heavily. They should still be insanely bullish. There's still good contracts going on. You got Biden elected now that's going to be pushing these things. That hasn't changed. And yet Northland Power, my favorite monthly paying dividend stock of all time, is trading down like 16% right now. If this yield gets over 3%, if it could just drop closer to $40, if I were you, I'd be on this like candy store. For right now, I'm just going to reset up a drip because I own so much of it. I'm just going to let my shares repurchase down here. Closer to above 50 was a little high for me, but this is a pretty good entry point to continue buying. In the speculative side of things, but not so speculative, guys, you should be keeping an eye on fintech right now. I'm very interested in the whole payment gateways, things like Visa, even Shopify to some degrees. I've just never thought I'd ever want to purchase them because what the hell's the point? I own this through my QQQ ETF, and they've always been trading so astronomically high. But, when they're trading 20% off these all-time highs, starting to pull back a little bit, great entry point here, folks. I mean, we should even be talking about the China stocks have fallen off drastically. BABA's back down to where it was when Jack Ma was missing. And I don't think that's fair deal. I mean, these are great buying opportunities, guys. Remember back in March when all those recovery plays crashed and everyone was terrified to own airlines, Carnival Cruises of the world. And yet if you bought them, not even a year later, you've over doubled your money. This is what you're going to see happen right now with these kind of tech stocks. I mean, heck, even Tesla, guys, is becoming attractive here. I didn't think I'd want to own Tesla again. I'm not a big fan of the 650 range, but when it dabbles down to those 550 areas, which I don't know if it'll hold there, who knows? It's attractive, guys. I'm sorry, but it starts becoming very attractive for the future prospects. When you're talking about 3, 5, it'd have to be at least the 3 to 5 year term because Tesla's years out from proving these revenues. It's just the branding and the opportunity here, guys, especially when you're going to listen to Kathy Wood's bull thesis from ARK Invest come out in the next week or two on Tesla and the general space. I'd be very excited around these and be paying attention to these numbers if they continue dropping. Speaking of ARK ETF down 22.8%. I'm finding these very attractive. I don't own the ARK Innovation Fund, but I'm thinking about, heck, if I'm not going to keep buying QQQ, I already own ARKG. ARK, the innovation, the flagship fund, looking very attractive here too, guys. But what about the stocks that are ruining me? Because like you, I am experiencing major losses. I've been down 40, 50% on some of these suckers, and by the only exception of Stable Roadhouse Acquisition, the SPAC lore that is destroying everybody right now, anyone that owns SPACs. I don't know if I would call this a bubble bursting. If you know anything about SPACs, guys, they can only drop so low because it's like giving your money to a bank holder that's eventually going to purchase something, but they just give you your money back if the acquisition doesn't happen. And I'm kind of fearful that that could be a very real reality with Stable Roadhouse acquisition. But I'm more inclined to believe that it is not. My girlfriend luckily sent me this article this morning, because when these things fall off a cliff, your hair stands up on your back and you're like, damn it, I got to do more due diligence to make sure I'm not holding something that's going to completely destroy me. Taking a look at the Momentus founders to divest shares after the Defense Department concerns. This company was supposed to be on the Falcon 9 rocket ship in January. This company was supposed to be putting satellites up in space. They've lowered the infrastructure cost of late-stage satellite delivery from $10 million to $1 million. Yet, this company's falling off a cliff. It seems so resilient and so awesome. I mean, even Chris Hatfield is part of the damn board meetings. You know, the space odyssey guys. I love the space industry, yet this is brutal and painful. And oh my God, where does this end up? I don't know, but basically all these problems are residing from the Russian CEO that had to step down because he was seeking asylum in the U.S. And oh my God, for a company to be involved with NASA, SpaceX, and all these big companies is a security risk to the U.S. So they slapped sanctions on this company, said, hey, look, we got to investigate here before you're going to be going to the space anytime soon. And it basically pushed back all of their projects for the next few months. And I think it is causing issues with this merger. Keep in mind that the merger has until May 13th to file. And if it doesn't file by May 13th, guys, we just get our money back at the unit value of like $10. So I basically lose 50% of my investment, which was a reality I took on when I bought into this. But this is high risk, high reward plays, guys. And if it drops 50% and this thing survives through all of this, there's still a huge likelihood, you know, it could explode hundreds of percent. I mean, it's the volatility of these more speculative plays. I mean, let's talk about MindMed more particularly here. It's nice to see a bit of a bounce back, down 33%, one of my greatest plays of all time. And yeah, they're continuing to dilute shareholders, which I found kind of interesting. After all the millions they raised, the hundreds of millions, they're still continuing to do more bought deals. They just did one at $3.25 Canadian. Luckily, it's trading a little above there, so we're going to find some cushioning right now in the share dilution. They raised $19.5 million to continue doing expenditures on Project Lucy, and it does kind of screw us over a little bit. It stops the stock price from going any higher. I don't have a love-hate or anything with this until we can get through some trials. I'm going to be holding some of my shares long. And actually, speaking about this, why don't we just take a look at my accounts? Because I'm going to be changing the way I manage these growth stocks. I'm literally going to be selling them all off and repositioning them. Not in a bad way, however. Not in a bad way. Let me explain to you. So in my RBC account, guys, this was the newest account I started. It's worth about $30,000. I got some really great growth stocks in here. Facebook, Stable Roadhouse, my QQQs, my ARKGs, which I'm down fairly amount of all of them, about 10%. Really not that bad when you think about the grand scheme of things here. Sorry, I hit my table. But if we scroll up, I also have a lot of my dividend stocks in here. And this is basically going to be an account that I'm about to demolish. I'm about to get rid of it. Why? Because I'm opening up a corporation. I've talked about this. I'm going to be doing a full video on it as soon as I get through the process. But basically what happens, guys, is I sell off my assets. I get them out of my personal name and I put them in a business that gets the liability off my back. Once they're in that business, the government looks at it as a separate entity and treats it under a different tax treaty. And that tax treaty is nominal. Actually, from what my accountant told me, it's basically 3%. So I can trade these stocks, make all this money, and literally pay no tax. And it doesn't make sense because I don't want to hold my growth stocks in a position where the only way I make money is by selling them. And then I automatically put a tax slap on my hand, and then I got to deal with it immediately because it's my personal income tax. In the corporation, I can trade all day long, make all the money I want. And the only time I pay tax is when it leaves that corporation and I pay myself a salary, which will be documented, right? I now want to make my personal brokerage accounts pure dividend, pure cash flow. So that way I can tap into that income if I ever so choose to need it. And it just kind of gives me some stability in my personal accounts. I'm only going to be buying Canadian dividend stocks in this account particularly. So I'm a little bit more tax protected as well. And then, yeah, I'm not going to take all this money and dump it into the corporation. I'm just going to do a quick shift around. So all the money in this account, guys, I'm going to be getting rid of Facebook. I'm going to be getting rid of MindMed, Momentus, and I'm going to be putting it into the Canadian stocks that I'm already holding in my RBC account that paid dividends. And then I'm going to be selling off these growth stocks, and I'm going to be repositioning all the growth stocks into my new brokerage account, which will be about $30,000 or $40,000, at which also all of my income from now, my corporations, which is basically Passive Income Investor Incorporated, is going to be shifting into that corporate account as well. So I'll make money off this YouTube channel, off my websites, funnel that all down into the corporation, trade stocks in the corporation, and have a grand old time paying hardly any tax with no personal liability. And damn it, if I only want to pay myself $20,000 or $30,000 in a year, damn it, I will have the right to pay myself $20,000 or $30,000 in a year and pay like no tax. I don't have any expenses, guys, so I don't know why. You know, if you watch my videos every month, you'll be well aware that I am paying a lot of money in taxes because I'm starting to claim a lot of capital gains on things like MindMed, and I'm starting to realize that my income is growing and it does not make sense for me to have to be taxed at the full income tax rate. So I will make full videos. Consider subscribing in the future. I will be doing a full account update on Friday as I usually do. But in light of all this, I passed the question off to you. A bit of a general video today. I just wanted to have fun, talk about things that I find interesting in the stock market, but I want to know what you find interesting. Let me know in that comment section below. But stay cool, stay awesome, and I look forward to catching you guys tomorrow.